We're talking to David Burrows here from Barometer about North American large caps at 1-855-326-6266. We're off to the local line in Toronto. Barbara, thanks for holding.
Hi. My
Hi.
question is for David is about CVS in the U.S.
Okay.
And I'd like to get the market consensus as well.
As you wish.
Great. So, Barbara, the last time I was on, we talked about CVS and talked about the fact that the drugstore group as a whole is a pretty defensive group in the market. And if you look at the things that are working, the key themes, they're more offensive sectors. And so, first of all, I'm cautious in general about more defensive bond-like sectors. Second, I'm very cautious of the bricks and mortar retailers because almost every day I hear about something else that Amazon is going after. And I'm a big shareholder in Amazon and online retailers. In our global macro strategy, we own online retailers, and there's an ETF FDN,
okay.
And we're short the bricks and mortars retailers, XRT, and it's been a pretty good trade. There's nothing pointing to a change in that theme. So I just think I would be careful. CVS is a great company, but the problem is you're really challenged with the group and really challenged with the theme.
What about the fact that it's not a pure play pharmacy? You've got that benefits management component to it as well. Does that not help even it out?
Yes and no. I think that what we're going to see is one of the big online guys buy a big healthcare database, and then it's going to be trouble for these companies.
Barbara, Street consensus, $87.17, 12 months out, with a consensus buy recommendation suggesting a 12% upside from here.
Just remember, we're in a bull market. This market has been screaming, and this stock can't get off the carpet. So it's pretty hard to get excited about it.
Thanks, Barbara, for the call from Toronto, Oakville now. Hi, Joe, what do you know?
Yeah, hi. Thanks for taking my call. I just had a question about Slate Office REIT. Is the dividend sustainable as well as the share price?
Okay. I think that you're probably fine on the dividend. As a group, the REITs trade an awful lot like the bond market. And when you look at the sell-off in the Canadian bond market over the last 6 weeks, or the degree to which yields have gone higher and prices have gone lower, it puts pressure on utilities. It puts pressure on REITs. It puts pressure on consumer staples. And so in disclosure, we have a couple of REIT positions. We own some pure REIT, pure industrial, but we are short the sector because our belief is that we see slowly rising long-term rates.
9.4% dividend yields. Often when you start to get it to those lofty levels, that's, I suppose why Joe's concerned about the ability to continue to pay out. Whereas I see that the peer group, according to Thompson, is less than 5%.
Yeah, I think that the whole group you just want to be a little bit careful of. If you think that rates can go higher from here, it's going to be a headwind for this sector, and money will leave these sectors and move into more economically sensitive sectors.
Do you see the U.S. Federal Reserve raising in September?
I do think they will continue to raise.
Do you see the Bank of Canada raising again in October?
Well, my personal view is they made a policy mistake because I think they've done this at probably exactly the wrong moment.
Why?
Because we've got what I think is a fairly significant slowdown in real estate taking place in our two major cities. I think that we have an ongoing significant headwind in energy and what's happening in Western Canada. And to have had the kind of response in the currency from an interest rate increase is going to make it tough for them to continue to raise. When you look at it, the kind of move we've had in the currency, everybody was caught wrong-footed, no question. Everyone was short the Canadian dollar. Unless you see the Canadian dollar back off, I think it's going to be hard for them to continue to raise rates.
Thanks, Joe, for joining us from Oakville, Ontario. Carol in London, thanks for holding. Hello.
Thank you for taking my call. I'm interested in your guest's opinion on Vermilion Energy, and would he buy?
Okay.
Thank you.
So, Carol, in disclosure, we've been short the energy sector since January. We've covered about a half of our short. So I don't tend to try and find better companies in a bad neighborhood. We just sort of tend to stay away. We continue to watch for a sign that we're seeing some kind of bottoming in energy. The problem is that every time energy rallies, new production in the U.S. comes on. because really energy has become a mass manufacturing business in the U.S. and there's still too much capital available to the companies. So I just want to continue to be careful of the energy space. Gas is a little bit better than oil, but I still think you have to be careful, and there's not enough evidence that we've got a bottom in yet.
Thanks, Carol, for the call from London. Brief break for David Burrows, President and Chief Investment Strategist at Barometer Capital Management. We're taking your calls, emails, tweets, and video questions on North American large caps. Call 1-855-326-6266.